In the vast and competitive ecosystem of modern business, certain figures emerge with the power to reshape the very landscape. One such individual is Stephen M. Ross. He is a titan of real estate, a developer whose vision shapes city skylines. But he is also known in another arena, owner of a major American sports team, the Miami Dolphins. His story is not one of inherited privilege. It is a tale of calculated ambition and relentless drive. It began with humble origins and ascended to almost unimaginable heights. It is a remarkable example of how one can build an empire, brick by brick, deal by deal, across the span of a lifetime. He operates with a unique blend of patience and aggression, much like a predator in the wild that knows precisely when to wait and when to strike. His world is one of high stakes, where fortunes are made and lost on the turn of the market, transforming empty lots and forgotten industrial zones into thriving communities of steel and glass. Every great journey has a beginning, and for Stephen Ross, that beginning was in Detroit, Michigan. He was not born into a world of wealth or influence. His early environment was modest. His family life instilled in him a powerful work ethic and a desire to forge his own path. He pursued education with a clear purpose, understanding it was the primary tool available to him for upward mobility. He attended the University of Michigan, Wayne State University Law School, arming himself with the knowledge of contracts, regulations, and the complex language of the legal world. After completing his education, he took his first steps into the professional world as a tax attorney. It was here that he learned the intricate mechanics of finance, how money moves, and how deals are structured to be most advantageous. However, the slow, methodical pace of a law career did not satisfy his growing ambition. This restlessness led him to New York City. He took a position on Wall Street, working in corporate finance. He saw that the greatest fortunes were not being made by advising on deals, but by initiating them. After being let go from his job in finance, with a young family to support, he decided to put his knowledge of tax law and finance to use in the real estate world. He borrowed money from his mother. He focused on government-subsidized housing for moderate-income families, structuring attractive deals for investors. So that's how it began. In the year 1972, a new entity emerged in the competitive landscape of New York real estate. It was here that Stephen Ross founded Related Companies. In its earliest days, it was a small operation, a fledgling team in a modest office. Its initial focus was narrow and strategic. Ross used federal tax code knowledge to build affordable housing projects. These developments were not glamorous, but they were a stable, underserved niche that provided a steady revenue stream. The track record attracted capital for future growth. As the company gained strength, it expanded its territory. It moved beyond affordable housing, developing market-rate rental apartments, and embraced mixed-use properties, recognizing people wanted to live, work, and shop in walkable communities. The growth of Related followed a clear, repeatable strategy. Identify undervalued land, develop an ambitious vision, assemble a complex mosaic of financing, bank loans, private equity, and sometimes public subsidies. With capital secured, manage the construction. Upon completion, either sell for a profit or hold as a long-term income-generating asset. The process repeated, each cycle bigger and more ambitious. The company built a reputation for executing large, complex projects on time and on budget, a trusted partner for banks and cities, evolving into a global powerhouse. Well, that's the rise of an empire, an idiot. A key aspect of Stephen Ross's strategy has always been to think on a grander scale than his competitors. While others focused on single buildings, he looked at entire city blocks, even entire neighborhoods. This ambition culminated in some of the largest and most transformative urban redevelopment projects in American history. These were not just construction jobs. They were monumental undertakings. Billions of dollars in capital, years of planning, careful navigation of political and community interests. Perhaps the most famous example is the Time Warner Center in New York City. Opened in 2004 at Columbus Circle, it set a new standard for urban living. The project, approximately $1.7 billion, housed luxury condominiums, a five-star hotel, high-end retail shops, world-class restaurants, and a major media headquarters within two soaring towers. Built over one of the city's busiest intersections, its success demonstrated Related's ability to orchestrate and deliver on a massive scale, cementing its reputation. An even more audacious project followed. Hudson Yards, the largest private real estate development in the history of the United States. A city within a city built over a working rail yard on Manhattan's West Side, with a projected cost exceeding $25 billion. Multiple office and residential skyscrapers, a 1 million square foot retail center, a luxury hotel, a school, and the Vessel, a massive public art installation. This project literally created new land in one of the world's densest cities, creating value where none seemed to exist. Beyond New York, significant financial wins across Los Angeles, Chicago, West Palm Beach, London, and the Middle East. Each project adds strength, and the rental river of cash flow funds the next generation of ambition, a self-perpetuating cycle of growth. Observing the long and successful career of Stephen Ross, one can identify clear principles guiding his decisions, simple, practical rules applied consistently. First, seek out value where others see none. Looking at abandoned industrial areas, aging buildings, and complicated sites like rail yards and seeing potential. He often made his biggest moves during downturns, buying when fear was high and prices were low, a contrarian instinct. Second, careful and strategic use of leverage. Debt can be dangerous if mismanaged, so he structured loans to minimize risk and maximize returns, maintaining strong long-term relationships with lenders. Third, build a formidable team. Experts in finance, construction, law, and design, empowering partners to execute. Finally, a commitment to long-term thinking. While some flip for fast profit, Ross often holds high-quality assets, letting value compound over time. Patient, predictable rental income anchors the enterprise, enabling it to weather storms and take on decade-long projects. Patience, in his world, is a form of power. Simple rules, relentlessly applied. Today, in the year 2025, the empire that Stephen Ross built is vast and diverse. Its heart and soul remains Related Companies, one of the most prominent privately owned real estate firms in the world, with millions of square feet of Class A office space, housing corporate giants and financial firms. It controls a massive portfolio of luxury residential buildings, rental apartments, and condominiums, selling for tens of millions in the most desirable neighborhoods. The kingdom extends far beyond offices and apartments. A major component is retail. Curated destinations like the Shops at Columbus Circle and the Square in West Palm Beach. Luxury brands, fine dining, entertainment, powerful, consistent revenue streams. The company has diversified into hospitality, owning luxury hotels within mixed-use developments. A highly visible domain is professional sports. Ross is principal owner of the Miami Dolphins. Team values rise on media rights, sponsorships, and ticket sales. He invested heavily in renovating Hard Rock Stadium, transforming it into a global venue hosting the Super Bowl, international soccer, and major concerts. In summary, the journey of Stephen Ross from a modest upbringing in Detroit to the pinnacle of global real estate is a powerful narrative of ambition and strategy. He mastered the existing environment, combining law, finance, and construction, beginning in affordable housing, then expanding by identifying undervalued land, creating bold visions, assembling capital, and executing with a trusted team. He embraced complexity and scale, transforming districts, leveraging strong banking ties, empowering teams, and practicing patience to let assets compound. The ultimate lesson: do not just look for a quick transaction. Build tangible, high-quality assets that will generate value for decades. That is how one builds a legacy not just of wealth, but of steel and stone.